Double P here. So in this trading session, I tagged the SPY. It was a little bit of a tricky trade to navigate. So let's kind of get into it. There's my account there, real account, margin account. Stock is in real time, Amex, New York Stock Exchange, NASDAQ, real time. Equity options, real time. Futures options, delayed on this account for 20 minutes. I don't need them. There are other ways to find futures on the account. Forex, real time, others, real time accounts. So what do we always do? Well, first thing we always do is we always draw the box. So let's come over here first and let's get into the end of the day so you see how I draw the box. So when we're drawing the box, we usually go the last hour of the trading day. So that would be Wednesday. So we go and we look for, let me put the 20 up here and the 200. I'm working with a different chart now. I'm always tinkering around. I want to keep everything as clean as possible. So let me come over here and put the 20 up here so that you can see exactly what I'm doing. All right, so the hull, and add it again. So I got the 20 and we got the 200. This is not this is the, on your time frame, whatever you're using for your time frame, that is your 200. So if you're using the daily, that is the daily 200. If you're using the intraday on the hour, then is the intraday hour 200. If you're using a 5-minute candle, then it's the average 200 on a 5-minute candle. That's how it works when it's intraday. Okay, so moving average 20, 200. Just so that you can see it here, and let me just open this up here a little bit more. And let me auto zoom it. All right, so let me get my price level tool up here. We go from the last hour. Where is the high print? Where's the high print on the last hour? The high print is literally right here. That's the high print. So we mark it off. Where's the low print for the last hour? Never go back more than an hour. It's usually about 45 minutes, but I'll do an hour. So where's the low print? The low print is the low price action or the 200, whatever is lower. It's not the 20, it's the 200, right? So let's go here. Where's the low print for the last hour? The low print would be, and that's including tail bars or wicks, whatever you want to call them, bars, wicks, whatever. So this would be, you know, this is the open right here. That's the close, but this is how far I went down. So I'm going to right there. All right. And where was the close? So the close was, let me get the close in here. Give me a quick second. Let me get the close in here for you. Let's see here, 9:59. Where's my 4 o'clock close? Why won't it give me the 4 o'clock close? We're going to have to estimate this. Not really a big deal. Give me a second. 395.52. That was 395. 395.52. So 395. I mean, close enough. Which would be the high? 395.58 was the high there. 395.52. So I could do one of two things. Yeah, I could lower this. I'm going to activate this and lower this down. 395.52. If I can get to, okay. So let me edit this. 395.52, just so that we're on point. Because I'm going to get people asking me, well, why can't you get 395.52? Why is it 395.54 or 395.53? There. That's how you edit it. 395.52, right? So that's the close. High, low, close, right? So what do we do there? Well, now we draw the box, right? So let me come over here and draw the box. That was for the trade for today, 9:30. Let me draw the box to 9:45. That's when I usually go. So this gives me a good understanding of what I need to do. So there's the box right there. And so what do we do now? Stock opens up, ETF, futures, whatever you're trading. It opens up inside of the box. Depending on what you want to do, we kind of just leave it because that's all noise. The box is volatility. The box is price action. The box is support and resistance, right? That's all inside of the box, right? So we just wait and see what's going on. Stock opens up under the box. We take a short position. Stock opens above, we go long, right? So I usually like to wait for about 9:45. I want to shake it out. Sometimes I'll take it right inside here. It all depends on what I'm looking at on a 3-day, 4-day trend, 3-day, 2-hour, 3-day, 4-hour. You know the deal, right? There's a whole bunch of things, variables that go inside of it. So this is generally what I like to do. I like to look and see what's going on. Because we had that the jobs data come out and Powell and all this other kind of stuff, we don't know what was going to happen today. So I'm just hanging here, chilling out, and I'm just looking at everything. I actually just watched the market, all right? And then I waited. These were lows, so let me put in the low here. Let me add this here. So you're going to have to forgive me as I go through this methodically. So you're learning a really good lesson today to how to build everything. When you're doing the high-low, the displacement, you have to put the 0 because you want it for today. You don't want it for yesterday for the high and the low. You want it for today, right? So let me add that there and apply that. So there's the high, there's the low, right? So what do I always tell you off of the low? You'll have to forgive me there. The chef is making my smoothie in the background if you hear that noise. So off of the low, you're going to get that reversal, right? You're going to get that wild reversal. So what happens is you're going to get a massive movement, right? So let me draw the channel here so that you can clearly see the channel. So let me draw the channel over here so you see this channel. And that's a tight channel 1. So there's your first channel, right? There's your next channel. right? So let me remove this channel here. So there's your next channel right there. So I send the trade out to you at 10:16. Why did I send the trade out there? Is because I looked at this movement right here, this accordion. There's where the algorithms were trading, bounced out, ripped back in. So around 10:16, I got prepared and I sent out the order for you, and I took the trade after I sent the trade out to you at 10:16. All right, so bounced, consolidation right here. I told you it was like a 20-minute trade, right? So let me come over here and put in, instead of doing the 1 minute, instead of doing the 1 day, 1 minute, we'll do it right today, right? So that was my candle to get in. That was my opportunity. That's when I send the trade out to you. You can see right there, high level consolidation, right? Then you see the drop. Then you see the rip, touching out the high, getting out on a high. So what do we have there? 1040. Said it was a 20-minute trade, but obviously I got to wait. And as soon as it tapped out on the high, I was out. Right? So getting in here at the very bottom, so let's go over the price level tool. So getting in here at the very bottom, so getting in there at the very bottom, going through this consolidation, having a bumpy rough ride, and it's dropping. I waited, right? Because I said it was a 20-minute trade, and right around here at 10:30, right? Everything reversed and out on the high. Just right out, because I have the experience to know exactly what's going on. And as you see here, what times where we are now, this thing is just a sloppy trade, one of those days. I'm not going to fault you for, if you got stopped out, you got stopped out. If you stayed in the trade, you made a little bit of money, good for you. It was a difficult trade. The market's difficult right now, very difficult time indeed. So you just have to be very mindful of mitigating your losses and mitigating your profit. If you can barely squeak out a profit, finish in the green. If you can barely come out with a loss, when you're mitigating your loss, well then mitigate your loss. So I took a big position here. So let you just see that there, my day, because I knew what was going to happen today. And I knew I was just going to be in and out with this particular trade. I wasn't going to hold it. So for me, 5,100 on the 397 call, January 13th, the one I sent out to you, right? So, and yeah, I was down quite a bit of money. But the way these options fluctuate is when there's volatility involved with these particular options, then you can be down big. But then when it rips, like on a candle like this, it rips and you can make some big money. This candle right here was a 72-cent range. That's massive, right? On this and with the volatility. So, that's how it works. Volatility is your best friend and your worst friend, all rolled up into one. If you understand volatility, you understand how volatility works and how it moves, and how it affects the option chain, how it affects the instrument that you're trading, interest rates. Everything is compiled into it, and it's moving every second. Volatility doesn't stay the same for the entire day. It moves every second. It's constantly shifting, right? So that's all it takes is one candle like this, a 72-cent range. You can see the 72-cent range. Let me come over here. So if we look over here, look over to the top left, you're going to see where it says range, the R. It's 72 cents, right? Now, if you can't see it, okay, let me come over here so that you can see the range. All right, let me just go on my data box, put it on floating for you, apply it, hit it. So let's come over here so that you can see it. So now you see the range, 72 cents. All right, that's a big boy move for the SPY in that particular period on a 1 minute candle, right? That's a big boy move. So let me get rid of that. And let me get rid of my data box so I don't clutter up the screen so you can see what's going on. So big boy moves right there, right? 35-cent move, 61-cent move, 31-cent move, 28-cent move, 35-cent move. I mean, that's huge. That's a huge move, right? You can add it up if you want you can add it up from the open all the way up to the close. It's a big boy move, right? So that's it from Double P. I mean, what more can I show you today is, if you're wondering why my charts look different, I'm always tinkering around with my charts. I'm always moving my charts around. I'm always moving my study sets. I'm always looking at different things. I mean, over here, you can see right here, I've got 3 main screens that I look at, right? And if you want to see my study sets, I mean, I got a bunch of study sets. I'm always looking at my different study sets. You see them, my different study sets right there. I'm always getting different looks, right? Always, always, always. I'm not scrubbing the trade that I'm doing under one particular study set. I'm looking at everything. You guys know that, right? I mean, come over here, you look at my charts, right? I tell you, like I'm not hiding anything. I don't hide anything. You guys know exactly how I trade. You know exactly what I put up. This is the eagle vision for the entire marketplace. You know, there's different things that are moving on different days. I'm looking at different stuff. So that's it. So what do you want else you want to see? You want to see me drawing channels? Like this is, if you understand how to draw channels, you understand what the algorithms are doing. So let's draw the rectangle, right? I'm going to give you some lessons here today. Show you exactly what algorithms are doing. If you understand what algorithms are doing, you'll understand, and you can do this. And I do this all the time in real time. I draw these channels out in real time because I want to know what the algorithms are doing. And I've gotten very good at it. And I'll extend this one out right here, this last one right here. So look at what the algorithms are doing, right? Right there, lower, higher, stepping up higher, consolidation, higher, right? Because it drops down right here. There's the volatility box right there, support and resistance, rips higher, drops down lower, comes up, rips down, comes up, consolidation right here, more consolidation, right? The ETF right now, the SPY is breathing. It doesn't know where it wants to go, right? It's trading in that range right there. What's that price range? 396.12 to 395.19, right? That's the range it's in right now. So what do you do when it's in that range? Do you scalp? You could scalp, but why would you? Not with the volatility of these options, right? Especially when it's trading in a super tight range. You don't want to scalp in that range. It's not going to be worth your time. It's not going to be worth your money to be scalping in that range. That range is too tight. If it was another standard deviation above, like let's say it was over here. Let me get my drawing tool out here. So let's say this range is right here. It's 396.19 to 395.13, right? That's the range, right? 396.18 to 395.14. Let's say it was another standard deviation above. From this point right here, up here to down there. That's a range that you could scalp, right? So let me draw it. Right? That range right there, that's high level. That's high level resistance. You can see it right there, right? It broke through, broke out of resistance, hit the high, right? That's your range. That's a range I would trade, right? That's a big boy range, right? 396.76 down to 394.38. That's a big boy range. That's a range that you want to trade. You make some big beefy money there, right? So now all you got to do is figure out what direction you want to take if you want to have a directional bias and you want to make a move, right? Would I make a move in this range? I'll have to wait. I want to see how this volatility is playing out right here, right? Right now, here's my 20, here's the 200, here's my 20. I'm looking at it. You know what I mean? I'm looking at what's going on here. Is it stair-stepping down or is it stair-stepping up? No, it's bouncing around. If I was to make a move, I make a move on this candle right here, and I go right in on this position right here. Because why would I go in this position right here? Well, because there's a channel, right? Let me get the tool out here. Let me get the channel tool. That's a steep channel, right? Let me remove that so that you can see it. Let me open that up. All right? There's your channel. Why would I take that? Well, I would take this because this is a pause. This is the close. This is the pause. This is the doji right here. I would make that move right there if I was going to take that because there is resistance, there is support, right? And I was sitting and I watched that channel. That's what the algorithms are doing. What are the algorithms doing, right? They're escalator to the downside, right? You can clearly see it once you understand and once you see what's going on. So where would I want to get out? Well, there's a couple places where I don't want to stop out or get out. Right down here, right? And the lower end of this volatility box, right? That would be my profit taken if I so chose. Or this would be my second line right there. It would be 394.35, right? So profit taking here. Sorry about that. Didn't have my channel tool or my price action tool. Still on the channel tool. So I'm giving you a wild education right here for the process for making your moves, right? So there's that channel, right? Price level, support and resistance, horizontal price level. Where's the next one? Right here, right? So you're seeing it right here, right there, and right there. Look at the channel I just drew. Look at what the algorithms are doing, right? I would have took that move, and I'm sitting in that channel, right? There's resistance, there's support, right? This is all happening in real time. Once you draw these channels and you draw these slopes, you know exactly what these algorithms are doing, right? So there's there was my out. My out would have been right down here, right? Just like how I said, right here, I would have got out right there, bang, right on that wick, right? Because now look at what happened. Broke right outside of that channel, right? Now it's broken outside of resistance, and now it wants to make a move. So I would have waited all the way down here, right? That long wick, and I would have been out. All right. So that's it from Double P. There's your lesson for today. There's your end of the day trading session. That's it, right? Support and resistance, slopes, channels, volatility boxes. You're seeing me do it in real time, live, showing you what's happening. And that's how we trade, right? You stick with the course, stick with the end of the day trading sessions. You will learn a whole bunch. If you are in this for the short term and you get rocked because you might have got stopped out on 2 or 3 trades or 1 trade or whatever the number is, but you're making money and you're getting all panicky, I mean, this isn't for you, right? If you understand that this is a wealth creation tool and a wealth building tool, and this is a lifelong thing, all right. Once you get the foundation and the formula down and the system down, and you look at what I'm doing on a day-to-day basis, you look at how I'm trading, and you look at the end of the day recaps, and I'm giving you vision as far as what you need to do. Like, I'm a numbers guy. I look at numbers, right? This is all numbers. This market is run by machines and numbers, right? And you've got then big institutional backing making big block trades, right? I don't care about the retail investor. The retail investor, for the most part, is an idiot, right? They don't understand what they're doing. They're just all emotional. They're just gambling. They're doing whatever, right? I'm an option analytics, options probability, options volatility. I'm a quant geek, right? And then how do I back it up? I back it up with what the algorithms are doing. I don't care what humans are doing. Humans don't drive the marketplace. Algorithms, machines do, and big institutional order flow. That's what drives the marketplace, plain and simple. If you haven't figured that out yet, I mean, and you think, I mean, don't get me wrong. It all depends on the type of position that you're playing, like type of stock. You're playing meme stocks, then yeah, you're going to get the emotional aspect and a psychological trader, all that kind of stuff. That's why I don't really trade those kind of things, right? I trade what the machines are trading, right? I don't care about what the retail, the quote unquote, what are they called again? Wall Street Bets or whatever it is, that social media board. I don't even look at it, right? From time to time, I think the last time I looked at it was probably about 9 months ago, 10 months ago, just to peek my head in there and see what was going on. It's a rat's nest, right? The only thing you're going to learn out of there is how to lose money, right? How to get caught up in the hype, how to get caught up in the emotion, how to get swept up, and then you will be the last person to get in, and you will be the bag holder, right? And you'll be holding a steaming pile of what. So, get with the program, get where the big boys are playing, get options analytics, option probabilities, option volatilities, understand what's going on. I'm showing you right here exactly what's going on a day-to-day basis. Nobody's going to show you this stuff. Who's going to show you this stuff? I'm showing it to you. All right. So, I get a little bit fired up sometimes when I'm talking about this kind of stuff. So I'm just kind of going to dial it back a little bit. And that's it. So let me break out this channel. Let's remove it. Where are we now? We're in support and resistance, horizontal, right? I don't want to keep drawing stuff over here, but I look at this box, right? Those are my boxes. Look, let me extend this. Let me activate this drawing here. Where did I have it? right there. Let me extend this now. All right. There's your box. Still the same range, right? But I scalped. If I was going to scalp, there was my scalp right there. 3 red soldiers and that tailwind and that long tail wick right there, right? Sometimes that's all it takes. 4 or 5 minute scalp, right? It all depends. With size and position, 4-minute scalp, your day is done. That's all you need. All right. So there you see it. Still trading in it. Still trading in that serious range. You can scalp inside of that range, right? If you so choose, but I don't need to scalp in that range. But I can show you, and I showed you exactly how to scalp in that range and how to get in and get out. You've got to draw support and resistance. You've got to draw the box. You've got to draw the channel, right? So you know exactly how the algorithms are trading and know when to get in and when to get out, all right? So that's it from Double P. Hope you enjoyed this trading session, and a lot of stuff's happening right here with the SPY. So that's it from Double P. Take care, everybody.